Before we get into your 10 stocks you've asked us to have a look at, I choose a stock of the day and thought we'd take a look at Lynas today. Lynas Rare Earths, the company reporting a record fourth quarter for rare earths revenue this morning, driven by soaring demand for metals at mines to be used in electric vehicles and smartphones. The world's largest producer of rare earths outside of China said revenue rose to 186 million Australian dollars in the 3 months to June 30 from 38 million Australian dollars a year earlier. Rob Corlett, this was a pretty impressive update from Lynas also.
Absolutely. Yeah, look, they're taking advantage of the increased prices for rare earth metals, which is because of the semiconductor shortage. We're seeing that in the semiconductor shortage as well due to supply chain disruptions. So it's all very favourable environment at the moment for them to work within. So yeah, it's just looking good for them. We're a little bit late to the party getting involved in Lynas. Unfortunately, we probably bought the weakness there around May, around that 580 level. So it's worked out well for us so far, but I'd look to try and pick it up on some more weakness. I think it looks to be well positioned in the short to medium term. The electric vehicle market is going to be a huge consumer of rare earths, and that sector is due to grow at about 80% compound annual growth rate over the next 5 years. So, Lynas have a lot of things working for them. Should just be noted, there's a lot of talk about rare earths and things like that. They're actually really common. It's just that they're not really mined outside of China. But Lynas is basically the only scaled producer of rare earth metals outside of China. It's actually the second largest in the world, if you include China. So, well positioned.
So even though there's a lot in the world, it's mainly China, which makes Lynas's deposit, David Novac, really strategic, isn't it, for US Defence Forces and our Defence Forces too, in the usage of it?
Yeah, very much so. I agree a lot with what Rob was saying. It is a bit late to the party, as he said. Last year this stock got down to, would you believe, $1. Here we are looking at towards 7 now. So the only issue for me is if you've got the stock, you'd definitely hold it. I wouldn't be chasing it up here because it's trading on an incredibly high multiple. I mean, their cash flows are improving, obviously, and so is the rare earth material. Average price, I think, has doubled in the last year from $20 a kilo to 40. And they operate about 75% capacity from the Malaysian plant. The problem is they had some issues with water shortage, plus they're dealing with COVID, of course. That's another thing they're keeping a close tab on. So they're operating at 75% of production for the previous quarter. But again, it's the multiples up here. The market cap of the company right now is about 5.8 billion. They had 680 million in the bank. So, you're paying, there's an enterprise value around 5.1, 5.2 billion. And their net cash flow for the quarter was about 100 million positive, which was very good. But it's just the multiples. Yes, they've got some good outlook growth, except it's just a bit too pricey for me. But certainly if you've got it, and if you're a technical trader, you could buy it because it's breaking to a new high. But it's just too rich in price for me. There's better opportunities.
Yeah. Rob, what was your view? Obviously, hold it, and you're holding it because you got it in May. Would you be buying in at these levels?
Not where it is today after the announcement. I'd look for some kind of consolidation, hopefully a pullback. And then look, I'd be okay to pick some up, but only in a very small amount, so it wouldn't be a full allocation. To what David was saying, the current PE ratio on this is 413. So you're definitely paying up for the stock at the moment. You're looking for those revenues to continue to come through and for the margins to stay quite fat and juicy. At the moment, they're on about 19.9% EBITDA margins. But yeah, 413 times price earnings multiple compared to their peer group, which is at 19. You're definitely paying up for it.
Okay. Yep, it's shooting the lights out at the moment.